Now let's try to understand how the transaction price is allocated based upon standalone selling price, meaning that there is no discount. So let's take the example where a customer buys a bundle for $100, which includes one phone and 1 year service plan as well. Now if you go into the market and you can buy the standalone product, the phone is in $70 and the service is for $30. So effectively total standalone selling price is $100 and the company has also charged you total $100, meaning there is no discounts here. So how will you allocate the transaction price based upon the standalone selling price? So you will be saying that allocation will be done in the ratio of standalone selling price. This number is simply showing the ratio of standalone selling price here, which is 70 by 100 into 100, which was transaction price, which gives us $70, and similar thing is done for services, which gives us $30. And how will you recognize the revenue? So the phone revenue will be recognized immediately because the phone is delivered. However, the services will be recognized over the 12 months because this $30 service is given for 12 months. So $2.5 per month will be recognized over the period of 12 months. Now let's take the example, and before taking the example, let's see the textbook definition of the same. So textbook simply says that if the standalone selling price is the amount at which entity would sell the promised goods or services separately to a customer. In our case, both of the phone and the services were separate and they could have been sold separately as well. Once the price is determined for each performance obligation in contract, total transaction price is allocated proportionately based on the standalone selling prices. What we have seen is like the definition. Now let's see another example where we are getting the discount on getting the phone. So again, let's take the example where a customer is buying a bundle for $90, which includes one phone and 1 year service plan. However, if the customer goes into the market and buys both of them independently, then the phone would cost $70 and services would cost $40. So overall the total selling price is $110, but right now he is getting the bundle at $90. So effectively we can say the transaction price is less than the standalone selling price, meaning there is a bundle discount. So how we will do? Simply we will do again the same thing, that out of this 110, $70 is for phone, and out of this 110, $40 is for services. So we will be saying that this $90 of transaction price will be allocated in the ratio of these standalone selling prices here, which are given here. So you can see this $90 is allocated between both of them, and if you total them, these will become $90 here. So what is exactly happening is like discount is itself getting proportionated based upon the standalone selling prices here. Now the discount is proportionally allocated between the phone and services. Now let's see the textbook definition or textbook concept for this. So the textbook simply says that a discount arises when the combined standalone prices of all performance obligation in a contract exceeds the total consideration agreed upon. So here in our case, standalone prices total was 110, however the phone was being sold for $90, so there is a discount. Then what it's saying, unless there is a clear evidence that the discounts relate only to specific performance obligation. Here there was nowhere mentioned that the discount belongs to phone or the services. There is no clear specification. It must be allocated proportionately to all the obligations based upon the standalone selling prices, whatever we have done there. Now the similar kind of example is again given here, what we had seen above. So if you want, you can try and refer that, and let's see that once. There is no problem to see and have a look for 2 minutes. Then there is a company known as iPhone company, and they are selling 1 year Apple Care subscription plan. Standalone selling price for phone is $1,000, Apple Care $300, standalone selling price $1,300. However, Apple is offering entire thing at, sorry, the total standalone price was 1300 based upon these. However, Apple is selling it for $1100, so the total discount is $200, which is $1300 minus $1100. Then we will be calculating the proportionate numbers. So basically it will be like what is the proportionate value of this 1000 divided by 1300. So iPhone will have 76% as the revenue or transaction price, and Apple Care will be like 300 divided by 1300. So that will be having 23% as their transaction value. So out of the total transaction value of 1100, 76% will be iPhone and 23% will be Apple Care. The result is like the discounts got allocated.